Hello and welcome to Love Your Business TV. Warm welcome to everybody this week. Really excited to be here once again. I'm Adrian Peck, the presenter of Love Your Business TV. I'm also the owner and founder of Better Never Stops. We deliver business advice and coaching programs to business owners who run or want to run £1 million plus businesses. Now, I'm on a mission. I'm on a mission to help the UK's entrepreneurs and business owners to really get the most out of their businesses. The one thing that for business owners and entrepreneurs is the amount of time, energy, passion, and the hours that you consume in your businesses. And I really want you to get most out of them, particularly have more fun, earn more money out of it, and also get time to go and do stuff and really enjoy the lifestyle that you deserve out of it as well. So every week we bring you a live show. We stream it at 2:30 on a Tuesday afternoon. And the idea is we're going to build a community of like-minded entrepreneurs and business owners to learn and share lots of free advice and support for you. Each week I'm going to bring in guests as well to help me to co-present. I've got some girls lined up in the coming weeks, and I'll let you know that a couple of weeks in advance. I'm also going to put a schedule on the website as well and share that with everybody, so you can see some of the people that we're going to come in and co-present with me over the next few weeks. So it's all there to help you grow your business, have more fun, and enjoy your business a lot more. We're growing each week. We get more and more viewers, and I really thank everybody for all their positive stuff that you sent me last week, and the amount of people that are now starting to say that they're watching the show, which is really, really great and really encouraging. That I'm not sitting here on my own talking to a camera and an empty desk. So we can now. It'd be great, please, to know we're now live on Facebook and on YouTube. You can also download the podcast now on Spotify. Woohoo! Look at us. We're now on Spotify, so you can go on the Spotify channel, and we've got Love Your Business TV on there, and you can get the previous episodes and this week's episodes on there. So a warm welcome to our listeners now on Spotify. I will hopefully try and explain what we're doing through the process, so you're not completely spellbound, but those guys who are listening to us on a podcast, you can go onto our website and you can see the show as well, and therefore you can hopefully the slides will make a bit more sense out of what we're doing as well. So please feel free to get in touch as usual through adrian.peck at Peck UK, or from our website loveyourbusiness.tv is the other one, and that takes us to our Better Never Stops website as well. So let's crack on with this week's agenda, and as always we cover off some business tips. So we're going to take a deep dive today into cash, and most importantly, I've got some hints and tips for you to really put some extra profit directly onto your bottom line, and you can do that pretty quickly as well, and I'm going to share that with you. So we're going to look at our success model and hone in on cash, and particularly the financial management of your business. We've got the Love Your Business surgery, our question and answers that we do every week as well. I've had one question sent in so far from Richard, who runs a facility management company. So thank you, Richard, and we'll answer your question about invoicing financing, or cash flow financing, as some people call it. So I've got that. We're going to do. Hopefully we'll get some other questions as we are live as well. So if you want to, you can just input those comments via Facebook and YouTube, and they should come up on my StreamYard view as well as we go through it. And then we're going to talk about success. So really want us to share our success stories on Love Your Business TV. I think it's really important that we, as a community, we share the stuff that we're doing really well and the stuff that's working. That in itself becomes a learning piece for other businesses. And not only that, as you get to profile your business live across the nation. Of course, it's going to be on YouTube forever and more as well. So you get your business plugged on that. So please, let me send in your stuff as well, and I'll cover that off at the end and how you can share that with us. So without further ado, let's crack on with this week's show. Like I say, we talk about success and our success model. This is I've been working with business owners and entrepreneurs now since 2011. And during that time, I've built up a program. The program is based on what I see as the 7 key aspects of running a successful business. The first one is about having a strategy in place and about knowing where it is you want to go and how you're going to get there. The second part is about empowerment, or teamwork, if you put that better. It's about building a team around you that will also knows about where the business is going, and they can be part of that journey. Business is a team sport, and it's such an important part. The third element then is about controls. If you're going to have a destination, you're going to have a team around you, the one thing you need to know then is about where you are on that journey. So it's about putting controls and measures in place to maximize that and know where you are and have that scorecard in place. The fourth one, which we're looking at this week, is about cash and about managing the finance of your business, particularly managing cash flow, because that's so critical in your business. The fifth element is about efficiency, and that's all about getting more for less and about making your business more and more efficient as it grows. The sixth one then is about competition and separating away from your competitors. And then the seventh one is good old sales and marketing techniques. And it's about your business being out there selling every single day and having a constant marketing plan that's implemented every day as well. So that's our 7 key aspects of success. And like I say, today we are going to hone in on cash. And particularly, I'm going to share some stuff with you about maximizing your profits and putting some instant profits onto your bottom line. So there's obviously a lot more in our book. In my book, How to Fall Back in Love with Your Business, there's a whole chapter on this. So when we talk about cash, and I've got an acronym for cash, which is costs, assets, sales, and HMRC. And that makes up my acronym of cash. So costs is all about managing your costs of goods sold and your overheads. Now, cost of goods sold, without kind of getting into too much jargon, is really the direct costs that are directly attributed, the costs that are directly attributed to your sales. So when you sell something, invariably there will probably be products involved, and therefore the cost of those products is a cost of goods sold. So when you take away those from your sales, that's what you're given when you're given your gross profit level. So we talk about cost of goods sold, and then we talk about overheads. So the overheads are the everyday costs in your business, such as heating, lighting, insurance, your premises, your telephones, all that kind of stuff. So it's the cost of running your business before you even open the door, before you even turn a light on in the morning, so to speak. It's the cost of having that business there. And then we talk about assets. It's about maximizing cash flow with your assets. We talk about sales, which is there's 4 key drivers in sales. And then we talk about HMRC, which is about making sure your business is tax efficient. Like I say, there is all of those bits are covered in my book, but I want to really hone in today on the first part of that. Really, it's about managing your costs in your business. So this is really about direct impact on your net profits. And there's what I see is there's 3 key, what I call profit levers for your business. There are 3 profit levers, and putting each one of these will increase your net profit. So what are they? The first lever, yellow lever here, is about sales. And the first lever you can pull, and there are only 3 levers in a business. You can either pull your first one, which is about pulling your sales lever. And that lever is about increasing your sales revenue. Now, this isn't just doing sales for the sake of doing sales. This is about increasing your sales revenue without increasing your gross profit or increasing your overheads. So there's the first lever you can pull is about increasing sales revenue. And the easiest way of doing that, and I know you're going to scream at me, it's probably the hardest for you to do what you see, is simply by increasing your prices. By increasing your price, you pull back that lever and you instantly put more money through that through your accounts and therefore onto your bottom line. The second lever then is about decreasing the cost of goods sold. So again, a very simple analogy here is about taking by going out and talking to your suppliers and reducing the cost of your products. And that has an instant effect by decreasing that those cost of goods sold. That has an instant hit onto your bottom line as well. And then the third lever is then about overheads. So that's about decreasing your overheads of your business. So that, again, very simply, going out and talking to your suppliers, reducing down your costs of your utilities, reducing the cost of your phone calls, reducing the cost of your insurance, that kind of thing that we're talking about. So there's your three levers, and they're really, really powerful levers, very, very powerful levers. There are only three levers. So the first one is about sales, increasing your sales, and then decreasing your cost of goods sold and decreasing your overheads. And there's your three kind of key levers. So we look at the business here. We've got £1,000, again, a really simple sum I put together. We've got £1,000 worth of sales. We've got a cost of goods sold is £600 and our overhead is £300. So therefore our net profit is £100. Well, what we're going to do now is we're going to pull those levers. We're going to pull those levers. First of all, we're going to drive up those sales. So we're going to make a 10% impact on each one of those levers. The first one we're going to do is pull those levers back, and we're going to increase our sales revenue by 10%. And we're going to increase it without increasing gross profit. Let's say, purely in this scenario, we're going to increase our prices by 10%. So we're going to add another £100 on top of our sales. We're going to decrease our cost of goods sold. So we're going to go and talk to our suppliers, and we're going to get a 10% decrease on cost of goods sold, and we're going to take that down to £540. And we're also then going to negotiate. Let's say we negotiated with our utility provider and various other things. We managed to get a £30 savings, a 10% saving on our overhead. So we've now made increased our net profit from £100 to £290. That's not bad going, is it? Now, the real observant ones from you will recognise or notice from that actually what we've had is there's a multiplier effect through that process. So when you pull all three levers, you don't get a 10% multiplier effect, a 10% effect. You actually get a multiple applying effect across that. So in this case, it's actually 26.4%. It's not 10%, it's 26.4%. So you can see how powerful it is when you pull each one of these three levers. Some you'll be able to increase by more, some by less. But the idea is that you don't just pull one, you pull all three levers, and you can see the effect it then has on it. If you want and go for bangs for bucks, so to speak, the most immediate effect you can have, and actually the highest effect you can have, is actually by reducing your cost of your overheads. And I'll try and explain, hopefully, to you why that's such a powerful effect. If we take our scenario here where we've got our £1,000 worth of sales, £600 worth of cost of goods, and we've taken our overhead down by £30 to 270, and therefore we've made £130 worth of profit. So we've increased the profit by 30%, which takes up to 13%. that £30 worth of sales, that £30 worth of profit that we've made extra, if we would want to do that purely on sales, we've got a gross profit here of 40%. So in order to get the same effect out of sales, we'd have to increase it by 2.5 times. So therefore, every pound saving in overhead, if you make a 40% gross profit, it's equivalent to £2.50 worth of sales. So £1 worth of sales is £2.50 worth of sales increase. Sorry, £1 worth of savings on overheads is a £2.50 saving in equivalent to £2.50 increase in sales. So in the scenario here, £30 would equal £75 worth of in sales. Let me just show you through how that works. So in the sales here, we've now got £1,075 worth of sales, and therefore you'd increase your cost of goods sold because you're at 30% margin, 30% gross profit. Your overhead would, so to do the same, you've got £1,075. You've got your cost of goods at 645. Your overhead stay the same at 300. Therefore, your profit's 130, and therefore that's how you get it. You actually on here you get a 12% now net profit rather than 13%. So, but you can see where that starts to kick in, and the lower your gross profit margin, the higher the overhead return is. So let me just try and explain that again for you. So this is based on the 1 to 2.5 ratio is based on you making a 40% gross profit. If you were to decrease that gross profit, let's say you take it down to 25%, it's actually then 1 in 4. So the ratio is 1 to 4. And if you took it down to 20%, it's actually 1 to 5 ratio. So every pound that you save on overhead is worth £5 in terms of sales. And hopefully that kind of makes some sense to you. So you get more bangs for your bucks if you focus in on your overheads than you will in anything else. But of course, I recommend you pull all 3 levers, because then you get this multiplier effect across the whole of them. But if you were to start from somewhere today, start with overheads and reducing your overhead costs down. And I say for every pound on a 40% gross profit margin, for every pound that you manage to save there, that's worth equivalent of £2.50 worth of sales. Okay, hopefully that might kind of make some sense, and I've explained that. So your action today is to pulling those levers. And again, go back to your 3 levers. How do you increase your sales, increase your sales revenue, decrease your costs of goods in your business? So you're actually decreasing that. You're increasing your gross profit margin. And how can you decrease the cost of your overheads as well? And so you have this multiplier effect if you do all 3 at the same time. In your business. So in the best possible way of good old Blue Peter, I have given you some free tools on the betterneverstops.global. If you go to free business tools, it will take you to this page here. Go to free business tools. If I increase this here, so go to the free business tools. And then that will take you to this section here. You scroll down, and you can come to the Better Never Stops, the review templates here. I've got, there's a Better Never Stops overhead reduction project template I've put together for you, which is a Google sheet, or you can download it here on Excel, or you can download it from Google as well at the same time. Just to let you know, we've also launched a Get Your Financial Management Assessment now as well. We've launched a financial review scorecard this week as well, and you can assess your business about how well it's doing on financials, as well as there's some free hints and tips and more content on there for you. So if we just dive into the Google sheet and just go on to here, let me just take you through how the Better Never Stops overhead reduction project sheet that I've set up for you, how that works. So the idea is if you go to File and you can either download it in Excel or you can make a copy. You won't be able to do it directly in here, but you can make your own copy and you can fill out your own figures in here. So step one is to then, again, you've got some instructions up here, but if you copy and paste your overhead costs into here, and I've given you some idea of what they might look like to start with, but if you copy and paste them into here, and then if you can put the costs in there as well, but you can go through and let's say we put the costs in as we go through it. So you can kind of do that kind of stuff, put them all in, and then go through each of them line by line and go, okay, in the next 12 months, can I reduce those costs down? So let's say we can't reduce our thingy, but actually we could reduce our marketing and advertising. And we think we could actually get that down to £80. Let's look at utilities. So let's say we've done our utilities, and let's say our utilities is £1,500 a year, just fictitious numbers. And let's say if we shopped around, we think we'd get down to £1,200. So the idea is you can start seeing now that you're starting to get some savings in place. So that's your current, that's your new budget, and you're getting savings in place. And you can go through this every single line. Yes, it's going to take a little while, but I can guarantee you this is about putting money direct on your bottom line. So the next step on here is go, okay, we need to negotiate new terms with X. Who's going to do it? So let's say that's going to be John's going to do it. And he's on cracking on with that, and that's in progress. So we've now got a live document that you can update and keep going and work through all those things there, and you can see what that saving is going to be at the top line there. And obviously month to month you can go back to it and track it and keep doing it. As always, better never stops, so don't just do one round of it, keep going at it and keep managing down those overheads. It's really, really easy for overheads in a business to run away with business owners and lose sight of it. So that hopefully gives you a good steer on there about how you can do that and how you can start managing those costs in your business. And that's your homework this week. So if we go back to your action for this week, is about pulling those levers. How can you increase sales, decrease your cost of goods, and decrease your overheads? I say there's a lot more content on our website and also in the book. If you want a free copy, just drop me an email and I'll get you a free copy of my book out to you as a Love Your Business TV viewer. So let's crack on and look at our Love Your Business surgery. So I have been sent in a question. I've got another question come up on the screen now as well. So I'll take you through that in a second. The question I had from Richard, I'm just glancing up my notes here. Richard says, we run a facilities management company and we have been looking at cash is very tight in our business and every single month it's a bit of a struggle. We've been talking to our financing company about invoicing finance facility. So for those that perhaps don't understand what you're talking about, this is where you can actually go out and companies will loan you money based on your invoices that you'll get in, and they'll give you a period of if you're on 30-day or 60-day terms, for instance, let's say you're on 60-day terms with a company for one of your customers, you invoice them today, you can draw down a percentage of that straight away from your financing company, and then in 60-day times when it's paid, you get the other balance of that payment into your bank account. And obviously the invoicing financing company gets a fee out of that as well. So Richard says, basically, how do you feel about that, Adrian? And what would your advice be? Okay, so it's difficult to know, obviously, from a standing start about really understanding your business. The one advice I always give to business owners when they're looking at this type of financing is you've got to treat it as a short-term loan. I see many businesses that use it and then it just gets absorbed into their business, and it kind of replaces a bank overdraft, and now they've got invoicing finance in their business, and all you're doing really is robbing Peter to pay Paul on it. So you have to be really, really careful of that. And my big advice to business owners is that before you get into it, have a plan of how you're going to get out of it. And the reason I say that is that invariably invoicing financing is a bit like payday credit that you hear about and you see. It's there as a sticking plaster because actually it's covering up something else that's underneath it. So I would first urge you to get really on top of your finances. If you need it as a short-term bridging exercise, then do it, but make sure you have a plan of how you're going to get out of it in due course. Now, getting out of it may be in 6 months' time, it may be in 18 months' time, etc. But have a plan about how you're going to get back out of it and how you're going to put cash into your business. Cash is really, really important in your business. And I can't overemphasize enough how important it is for a healthy business. Really, really important. So hopefully, Richard, that makes some sense. If it doesn't, please just email me. Let's jump on a call. We can help you out from there. So I've got another question that's come up on screen, and it's from Phil. Phil says that we run. Doesn't actually say what type of business that you run. It just says we run a business, and you mentioned about increasing prices. Ha ha ha. We're a really competitive environment, and it's really, really hard to increase prices against our competition because all they're trying to do is drive our prices down. Fully understand, and I think I had £1 for every time a business owner said to me, all the people in the business said to me, Adrian, we're in a really competitive business. We're different from everybody else. You really aren't. Every business is in a competitive situation. The one piece of advice I can give to you is to make sure that you are delivering value. And it's all about delivering value. If the more value you deliver, the higher prices that you command, and your customers will love you for more and for longer. So how can you increase the value that you deliver to your customers? If you're in a competitive environment, like I say, every business is in a competitive environment. You will constantly be you'll be in a commodity market, and your products and services are commoditized. Make yourself different, decommoditize yourself, and look for the value you can add to your customers. They will then pay you the additional prices that you want out of that as well, because of that value you're adding. So that's my big advice to you, Phil. Again, if you want to know some more, you want to pick my brains more, please drop me an email. We can jump on a call, and you can challenge me to how I'm going to increase your prices, and I'm happy to help. So that's the 2 questions I've got this week. Please bring them, keep giving them in. Next week, we're going to be talking about efficiency and increasing productivity and improving processes. So if you have any questions around that you want to fire into us, please do. And I look forward to taking your questions. Now on to our last part, which is your success stories. Again, I'm going to keep going on that. I keep banging on about this every single week because I really, really, really want to share your success. One, because we can learn from it. We can learn what other people are doing well and share that across the community. And secondly, I want to plug your business. I want to help you grow your business, and by me plugging it, hopefully We can get some referrals in, and we can get to see what a great business you are that you're running as well. So every single week, I'm looking to share this and share your successes. Again, if you go onto our website, you can see a form on there. So if you go to loveyourbusiness.tv, Love Your Business TV, and you can see this form, fill out this form. They can then upload your logo and stuff, and we can then share your great news about your business. So please do that. And then next week, we're looking at our fifth step of our 7-stage process. We're looking at efficiency, and we're looking at business efficiency and getting more for less for your out of your processes. Really looking forward to doing that next week. So it's the same time at 2:30. No, it's not. 3:30 next Tuesday. Loveyourbusiness.tv. We're live on Facebook, live on YouTube as well, and you can download our podcasts as you go as well. So thank you very much this week. Really, really enjoyed it, and hopefully you've got out of it. Please keep your comments coming in. Tell me your positive stuff that you're finding from it. And again, we want to share your success stories. Keep those questions coming in as well. Thank you very much. And remember, better never stops.